I'll give you an example. I was reading that was the worst drought that had been faced in Ethiopia specifically, and that's a big issue. That's not unique to just Ethiopia. That's what's happening around us. That's the experience in Kenya. That's the experience for the Nigerians. Talking about the Sakiti, for example, in South Africa, the cyclones in the southern coasts of Africa. Just thinking about it, every single one of us is actually seeing the climate change impact. So it's not debatable anymore because you can actually see them. And science has proven that climate change, if you don't make a change right now, we might never make it. So it's either now or never. And all of us coming together as Africans to make this change is critical because it's time for the transition. The transition is going to happen, and we all need to be ahead of the transition. We all need to take the different chances that we have to transition to a net zero economy and make sure that we create a better world for the future. So today I'll just quickly take you through the program. Today we'll be talking about innovation and sustainable finance. So sustainable finance for banking, for insurance, incorporating environmental social governance, reporting, and incorporating that in our strategies as well, and actually actioning that as we continue to implement the different programs and the different projects that we have. So I'm very happy to see you here, and I'll just quickly take you through the program. We'll start with keynote speeches. We'll start with Belai Tulu, and then we'll move on to Maya Seshetu, and then Kelvin Massingham. So please help me welcome Alto Belai Tulu to give his keynote presentation. Thank you.
Good morning. Dear invited CEOs of insurance companies, CEOs of brokers, guests from FSD Africa, and all participants. I am happy to be with you today on this special event. Particularly, I want to congratulate and say happy birthday to FSD Ethiopia. Probably you might have seen yesterday, FSD Ethiopia was launched in the presence of higher government officials, and we are happy to have FSD operating from Ethiopia because as insurance regulator and as part of the financial industry, we expect and we anticipate to have a very good working relationship and common desire to expand and deepen the financial market of our country. So the National Bank, as you know, is a regulator of the financial service industry, and I'm speaking on behalf of the Insurance Supervision Directorate. As you well know, our directorate is tasked with the regulation and supervision of the insurance business, not only about regulation and supervision, it's also interested with the development and growth of the insurance industry for the betterment of the society and to contribute its share to the national economic growth. This time around, we have 18 insurance companies and 1 reinsurance, domestic reinsurance company. We have 59 brokers, about 2,700 insurance sales agents, 95 loss assessors, and 3 surveyors are working or operating in the Ethiopian insurance industry. According to the data we have, as at December 31, 2021, the gross premium written is 10.2 billion. The assets have reached 42.2 billion, and net profit the same period for the same period is 1.6 billion, and the capital has reached 11.9 billion. As you can imagine, all these figures could be found on the balance sheet of a single middle level microfinance institution. So the whole figures shows that where the Ethiopian insurance industry stands at this point. And there is a huge task ahead of us to expand and to grow the insurance industry. So I'll try to bring to your attention some of the new developments in the financial service industry and focusing on the insurance industry. As you know, there is an ongoing debate and discussion at the higher level to open the financial industry for foreign investment. And the same will apply. This will include bank and insurance. So we are in the verge of opening the insurance sector to foreign competition, which will give us some stimulus to adjust ourselves and to think what we are supposed to do about the coming challenges and opportunities that will come with the opening up of the market. Another important issue was we have included in our proclamation a provision that allows the establishment of takaful insurance. Accordingly, so far we have 5 insurance companies who have taken or who have granted the approval to operate as window takaful operator, and there are 3 companies who have launched or lodged applications, to the National Bank, and they are underway to join the market. So we'll see, we are expecting to see more and more companies coming to join the insurance industry. So as you all know, there is also an ongoing debate, even if it has not been decided which way to follow, about the fate of insurance supervision. Where should it be housed? Should it remain in the central bank, or should we have a standalone insurance regulatory authority? You are part of that endeavor, and we hope a policy decision will be taken without further delay. Our relationship with FSD Africa has a long time, because we have been working with FSD Africa from last year. In fact, we were working with them remotely because of the known reasons, and we have tried to introduce or to initiate and to create awareness on RBC, and we have been working also with our East African regulators to harmonize our regulation as far as insurance regulation and particularly RBC is concerned, to harmonize and to have a similar approach for the insurance regulation. And in this regard, FSD Africa has worked with us on the introduction of simplified solvency in our market. Now that we have FSD Ethiopia, this work will continue, and we'll hope to get a better result than working FSD from the Kenyan office. Today, our today's main topic is about climate, environmental, social, and governmental factors, which, as you know, should be integrated into our strategies, into our product designs, into our regulation. So this should be the topic for our today's discussion, and I hope we'll have a very fruitful time together. And I would like to welcome you on behalf of the National Bank of Ethiopia to this very important meeting and discussion. Thank you.
Thank you very much, Atabelai. It's a pleasure to have you here today. We all know for us to have the transition, regulation is key. And the National Bank of Ethiopia has been very instrumental in this collaboration. We've worked with them very well. And Belai has been a very good partner. He supported us all through, including actually organizing this session today. So thank you very much, Belai. So we'll move on to the next keynote speech. I would like to welcome Kelvin Massingham. Kelvin Massingham is the Director of Risk and Resilience in FSD Africa. He's leading more of the insurance work and climate adaptation work in FSD Africa. Thank you very much. Please help me welcome Kelvin Massingham. Thank you.
Thank you, Zilla, and very good morning to you. And it's good to see you here. Thanks very much for coming. Special thanks to National Bank of Ethiopia and FSD Ethiopia, our partners in co-hosting this event. Ato Belai Trulu, the Director of the Insurance Directorate at the NBE. Thank you so much for your welcoming remarks. And Ato Omias Ashirtu, looking forward to yours, and thanks for your partnership. And it's great to be here together this morning. I'm from FSD Africa. We're a development agency that's funded by the UK government and is focused on how do we make finance work for Africa's future? And so we're involved in building and strengthening financial markets in Africa so that they contribute to economic development in the way that they should. And what we're interested in is just and fair, inclusive economic development that leaves no one behind. And we're concerned with economic development that is resilient so that the gains that we make aren't not lost by shocks that we face. And so as FSD Africa, we work across the continent, although Ethiopia is one of our focus countries. And as you've heard, we've been working here in Ethiopia for a while, also on the capital market side. We're very thrilled that yesterday we were able to launch FSD Ethiopia, which is a sister organization that we're going to work very closely with, that's purely focused on financial sector development here in Ethiopia. And so there's exciting times ahead. As we heard, there's lots of work to do in this market, but there's also huge potential. And so this morning, what we want to talk about is how you as the banks and insurers in this market can play a very significant role in contributing to a sustainable future for Ethiopia. And so I actually want to start off by telling you just a short parable. And then I'll explain in a moment what I mean by a sustainable future, because I don't want to use buzzwords this morning. I want everything that we talk about to be relatable and real for you as business leaders. And so the parable is this: there was a man that was walking to work, and as he was walking, he came across a construction site. And on the construction site, there were 3 men working there. And he walked up to the first man and he said, "What are you doing?" And the guy said, "I'm laying bricks." And he walked on to the second guy and he asked him the same question, "What are you doing?" And the guy said, I'm building a wall." And then he came to the third guy and he was humming as he worked, and he said, "What are you doing?" And he said, "I'm building a cathedral." Or equally could have said, "I'm building a mosque." And so the point is that we can be doing the same thing, but the vision, the bigger picture that we have for what we're doing ultimately makes a huge difference in terms of the purpose, the meaning of what we're about. And having that vision kind of takes the focus off just you yourself or the business that you're running, and kind of elevates the picture to something more significant, a greater good. And so that's kind of what we want to talk about this morning. How can you as banks and insurers contribute to the greater good of society? And I know the realities of the environment in which you operate. I have been a CEO of an insurance company in Africa. I've worked in the private sector in insurance and in financial services for over 20 years. And so I very much understand the kind of environment in which you operate, the pressure from the board to deliver short-term results, the kind of the constant need to kind of deliver top line and the competition that exists around that. some of the challenges that you face in the market in terms of demand, in terms of understanding, in terms of affordability, also some of the regulatory constraints that you operate in. But what I do want to do this morning is kind of pan out from all of that and look more at the bigger picture and paint a vision for how you as leaders, how the banking and insurance industry can contribute to building a safe and resilient and sustainable society. And as I said, I don't want to talk about buzzwords, so I just want to kind of define what we mean when we talk about a sustainable future or sustainable development, and then we'll get on to how you can contribute to it. So when we talk about sustainable development, we mean development that kind of prioritizes the needs right now, but doesn't compromise the needs of future generations, so that we're doing things sustainably. So the society and the planet, the conditions of those things that we hand to future generations isn't worse than what we have now, that we kind of, we do things in a sustainable way and in a holistic way. This is where the UN's Sustainable Development Goals come from. And these things are holistic. So we're talking about human development, which is super important, society, people, reducing poverty, these important things. But what we also want to do is sustainably use the planet's natural resources, the ecosystem services that it provides, so that we can continue to benefit from natural resources that we depend on for our livelihoods, we depend on for economic activity. Societies depend on these things. And so we need to take care of them effectively and sustainably. And what I want to say this morning is that the financial sector has a very, very key role to play in doing this. So financial sector is the allocator of capital in a market and really drives economic development in a certain direction. And so the choices that you make as banks, as insurers, in terms of how you underwrite, how you lend, how you invest, determines the path of economic development within Ethiopia. And results in important outcomes that are key for Ethiopia. And so I want to again be real here and just talk about some of those outcomes that you can contribute to. And so the first is access to jobs. So the financial sector has a very key role in providing to businesses the financial services that they require in order to grow, the credit, the working capital that the business needs in order to thrive. In the same way, insurance provides kind of resilience to SMEs and to businesses that enable them to withstand shocks that they face. So when so risk management enables a business not to fail when a big catastrophe occurs, something like a fire or the loss or the death of a key employee or a CEO. These things build resilience so that businesses can continue when catastrophes occur. The financial sector is also very key in providing access to basic services, things like health and education. And so one of the key reasons why people can't access healthcare is because of finance, the inability to pay. And the insurance industry, for example, enables you to prepay for healthcare, that you pay on a regular basis small amounts, that when a large health event occurs, that is covered. The risk has been transferred to the insurance company and they're able to pay for it. In the same way, education and financial services allows smoothing of income, so that when a negative financial circumstance occurs, you don't have to take your kids out of school if you're vulnerable to that. And financial services also enables environmental benefits. So we're talking holistically here. We're also talking about making sure that we look after the planet. And so, as Zilla said, in Africa, we're very much aware of this, of our climate vulnerability. And in Ethiopia, very much so. You're in the midst of a drought that by all accounts is kind of the worst in 4 decades. There's been 3 failed rainy seasons. The rain is late again for a 4th season. And so there's a very significant drought, and that is impacting millions of people. And so there's a high amount of vulnerability. And as the climate continues to change, as the carbon in the atmosphere causes the planet to continue to warm, these extreme events will continue to happen with increasing frequency. And so the financial services, and especially the insurance industry, can provide resilience in these circumstances. So if a farmer currently had insurance on his livestock, this severe drought would have triggered a claim that would enable him to either save his livestock or purchase additional, and so kind of move through this with resilience. But as you know, those sort of products don't currently exist in the market in Ethiopia, or there's very low penetration of them. And so the financial sector plays a very key role in providing resilience to climate change, but also in enabling money to flow to green initiatives. And so, Zilla talked about the transition. We need to transition from a fossil fuel economy that's emitting carbon in increasing measure into the atmosphere that's continuing to cause warming. We need to transition to renewable sources. And in Ethiopia, you are blessed with just an abundance of natural resources that enable renewable energy, whether you're talking about hydropower or whether you're talking about geothermal, which we're going to talk about a bit more later. These are wonderful renewable energy sources. And finance in the financial sector enables capital to flow into these projects. Project finance, debt or equity, de-risking solutions enables bankable projects to be taken to market, money to flow, and these sectors to grow and to flourish. And so Ethiopia has the potential to become an exporter of renewable energy to the region. And so these are big opportunities where you can contribute, and we'll be talking more about that later in some projects that FSD Africa has in that space. And so what we're talking about this morning, it's already been mentioned, is ESG. ESG stands for environmental, social, and governance. And so this is a framework for how you can assess these broader issues within your business and take them into account in your strategy and how you do it. They're kind of non-financial decision-making factors that you can incorporate into your financial decision-making. And so this is about having a vision beyond just your company. It's about having a vision for how you can be positively impacting society, positively impacting the environment through what you do, through having this framework where you actually consider these other aspects as you make financial decisions. So as companies, you're always making risk decisions, whether you're a bank and you're making a lending decision and you're deciding what the default rate should be, is going to be on that, and then you're pricing it accordingly. As an insurance company, you're always making underwriting decisions and you're pricing risk. And if you only look at the financial risk, then you're missing out, because there's these broader issues that need to be considered. And what we want to say this morning is that these things are significant, and that actually there is a business case for considering these wider issues. It's not just a case of, we're not talking about corporate social responsibility this morning. These things will make a material difference to businesses that succeed or fail in the future. So there's both a risk side, and if you don't consider these risks, businesses will fail in the future. But there's also an opportunity side, that businesses that are incorporating these type of ESG factors in their strategy will be more successful, will grow, will be bigger. And so again, I just want to make that really concrete and real, and just give you some examples. So on the risk side, say you're a bank and you're lending, and you're lending to say a textile factory, and in your assessment of that textile factory that they are exploiting their workers, that there's unlawful practices that are happening in terms of the way that they treat their labor force. But it's a profitable loan. You can charge an attractive interest rate, and so based on a purely financial decision, you lend to them. The social risk, though, is that the unlawful practices come to light. There's a lawsuit that comes into the public domain, and as a result of the legal pressure, the consumer pressure, that business then fails. Your loan defaults, and so by not considering the social factors, you're exposing yourself to a whole lot more risk. And there's also significant environmental factors. If you look at the World Economic Forum's Global Risk Report, which is the report that looks at global business leaders, and they rank risks in terms of kind of severity and likelihood, all of the top risks are environmentally related. Things like climate change, things like biodiversity loss. So these are the long-term risks that we face as businesses, and globally it's recognized that these are the top risks that we're going to face. And so we need to be incorporating them into our decision-making. But at the same time, the story is not just about kind of mitigating risk, it's also about opportunity. Because what we see is that in future, businesses that are going to grow the most, that take advantage of new markets, are those that are taking advantage of the opportunities that exist in terms of providing solutions that meet real needs. So we're talking about individuals in Ethiopia, businesses, and their particular needs for financial services. And at the moment, a lot of those needs are going unmet. And so if you're able to develop new products, expand into new markets, that provides a growth opportunity. And we might be talking a very different story when we're looking at insurance industry statistics in 5 years if we start looking at how do we ensure the agricultural sector, how do we ensure SMEs, how do we provide lending solutions to them that meet their needs, that enables growth, that enables jobs, and that also enables finance to flow to environmentally friendly solutions. And so these are things that in 5 years' time, companies, or 10 years' time, companies that have really taken seriously, taken advantage of, look to innovate in this space, can really see a lot of gains in. And so that's what we're going to be talking about this morning. We've got a number of different speakers, experts that are going to be bringing their perspectives on this. We've also got a panel discussion where we're going to have some of the leaders from the industry here in Ethiopia talking about the state of the industry and some of the opportunities going forward. And then as FSD Africa, as FSD Ethiopia, what we want to say is that we're here to support, and we're here to journey with you on this. And so I'm going to close today by just talking about some of the practical next steps that we can take, how you can get involved in this, some of the support that we're able to provide as an organization so that we can journey together to ensure a sustainable future for Ethiopia. Thank you very much.
Thank you very much, Kelvin, for for the keynote address. As Kelvin was talking about the missed rains, I just thought about how vulnerable Africa is, and that's all of Africa, including Ethiopia. So thinking about the hunger crisis, we're talking about around 23 million people actually facing dire need for food in Ethiopia, Kenya, and Somalia. Then when you put that into perspective, for example, the war in Ukraine, which is miles and miles away, has led to food prices to skyrocket. So what that means is that the most vulnerable, the most poor actually don't have food, they cannot afford it. And when you talk about the environmental risks and all that, you actually get to realize that the climate change is not just an environmental issue. You know, it's a hunger issue, it's a health issue, you know, it's a security issue. We're seeing Africans in the north migrating through the Mediterranean Sea, risking their lives just to get to a point where they can actually have the most basic needs. You know, it's an issue of inequality and injustice. And as I said earlier, you know, action has to be now. You know, the scientists are actually saying the next 50 years, if you don't make a change, then some parts of Africa will not be habitable. You know, the Sahara continues to extend. So we've talked about the role of the financial sector, making sure that investments get to the right sustainable projects. And that's key for us here, as I know the insurance sector actually holds lots of premiums. The banking sector has that as well. So thank you very much, Kelvin. So we'll be moving on to the next keynote speech. And I'd like to introduce Ato Ermaya Sesheto. FSD Ethiopia just launched yesterday, and Ermaya has been a key partner and worked with us very closely. So please help me welcome Ermaya Sesheto. Thank you.
Good morning. Atawalai Tulu, good morning. Thank you for honoring us this morning again. Good morning, Ron. Thank you for joining us. Ron has come a long way from England, and in his busy schedule, he's made the effort to join us this morning. He's from FCDO, the UK government, who's providing us the funding to do this kind of things. Thank you, Kelvin. Thank you. I owe you a big gratitude because this started with a short conversation with Kelvin, persuading him to come to Ethiopia to do this, and he took it seriously. And of course, with Elias, who's been passionately following through this. So this convening happened because of that conversation. So thank you, Elias. Thank you, Kelvin. Thank you all, ladies and gentlemen. Good morning. My name is Ermaya Sesheto. I'm the CEO for FSD Ethiopia. FSD Ethiopia is officially launched yesterday morning in the presence of government officials, honorable guests from the national banks, the governor himself, and other distinguished guests. And the whole purpose of FSD Ethiopia, and indeed why FSD Africa is doing this, is because there is so much vulnerability in our country here in Ethiopia, and that has to be addressed. And the UK government has made Ethiopia a priority country to be able to mitigate these risks, the problems that we have, and the way we need to be building the systems, the financial systems, to be able to address those challenges. Luckily for us, in addition to the initiative from the UK government, we have the Bill and Melinda Gates Foundation to also support us. Again, making Ethiopia a priority, and specifically in the financial sector. We are now established as a very unique development agency to intervene in the financial sector development. So specifically, we'll be working in terms of developing the financial sector. We'll be looking at the digital economy, digital payment systems, and of course, most importantly, today's convening with regards to risk and resilience. And this is, they all come together. It's all important. We have to really give the magnitude of attention that insurance or risk requires in this country, which we have not done. And I'm so glad Ato Balai highlighted some of the important elements of reform policy and what's required to make it more agile, more responsive to the needs here in Ethiopia. And it is our job. It's really basically in this room. All the innovation can only come from this room. All the need and the desire to reform from policy, from the actors, this is really where it can happen. And our job is really to help facilitate that. We have a few tools under our arm. We provide grants, we provide technical assistance, we facilitate convenings like this to happen so that people can come together to discuss and really explore in terms of identifying our priorities and where we can focus. We also do insights and studies and data analysis and stuff like that to inform us to make a better decision. So in that process, I'm really inviting you, you know, in one hand, FSD Ethiopia is here. This is a very important pillar for us going forward. It will transcend in everything that we do. Sustainability, risk and sustainability it's been highlighted from our funders as a key element to make significant impact in society. So it's going to be really, really important for us as well. So amongst ourselves, we also have Victor Malou. I really would like you to, I would invite you to spend time with Victor. He's going to helping me develop an Ethiopia-focused strategy. And in that element, he's here amongst ourselves. He will be the panelist later on as well. So take time to meet Victor to help us provide input, insights, perspectives, ideas, anything you have. Please feel free to come forward and talk to Victor. Thank you, Zila, also for putting this together. It wouldn't have happened without Zila's determination and effort. But all I can say is I think Kelvin has outlined clearly the need to focus on risk and resilience. And we all know why. Our economy cannot go forward unless we give the due attention this deserves. And I think that the whole idea of all of you honoring us with your attention this morning and providing your time, hopefully will result on one of the first steps in terms of taking this forward to make some meaningful change and meaningful attention and meaningful reforms in the way that we innovate the financial system here in Ethiopia. So thank you once again. We are really humble. We are privileged to have your all full room this morning. I really invite you to really take time and spend time talking to these experts. Kelvin and the whole team has come with enormous experience. They've done amazing interventions in Nigeria, in Ghana, and across Africa. So talk to them, try to extrapolate as much as you can while you're here, while your time is here, because they've got some experiences and interventions that they will be able to share with you, that you can take to your financial institution or to your team for further deliberation. So thank you once again for coming this morning. I do hope you enjoy the day, and hopefully if we see value in similar convenings, we intend to do more of this, so that we will continue to cultivate the investment and the time that we've taken this morning. So thank you once again. Enjoy it and have a good day. Thank you.
Thank you very much, Ato Ermias. We thank you for your partnership. And Ato Ermias has talked about innovation, and that easily transitions us to the next session, where we'll be talking about some of the innovative initiatives that are being implemented in Ethiopia. As you know, innovation is important, and the great minds in this room will probably be the minds that will come up with innovations for Ethiopia, because you understand the market the best. And for example, one of the reasons why Africa's we have financial inclusion at the moment is because of innovations from Africa, and that's important. We need to have ideas, we need to have innovations that work for us, for our market, because we understand them. So thank you very much, Ato Ermias. So I would like to move on to the presentations. Our next presentation will be from Mark Robertson. He works in Genesis Analytics. Mark has supported us with work on ESG integration, and he'll be sharing a presentation. He's not able to join us in person today. He'll be joining us virtually. And yeah, please help me welcome Mark Robertson. Thank you.
Great. Thank you very much, everyone. I hope everyone can hear me okay. I will assume so. Please stop me, Zilla, if people can't hear me. Thank you. It's lovely to be here. Thank you to the organizers and to the various speakers up front. And very exciting for me already to hear in some of the introductory remarks a lot of overlap with what I'm going to talk through today. So I've got about 15 minutes, and I want to talk about the importance of ESG to the insurance industry. And Kelvin in particular touched on this in his opening remarks. But very quickly, just in terms of introduction to myself and to Genesis, I'm Mark Robertson. I work at Genesis Analytics. I also work at the Microinsurance Network, and some of you I've probably met through that work. I'm afraid I can't see who's in the room, but if there are familiar faces there, greetings to you. Genesis Analytics is the largest economics-based consulting firm in Africa. We've got about 120 consultants across the continent, as well as in some global offices. We offer a range of advisory services, but I think for the purposes of today, one of the things that we're doing a lot of at the moment especially is working around ESG and sustainable business, looking at how that impacts regulations and policy. We're doing a lot of work with insurers, but also financial services more broadly. And we have a range of clients that are interested in this. And really, we are seeing a lot of global momentum around ESG and a lot of increased interest from various stakeholders. And I think it's a really exciting time to be thinking about this as an industry and as a country in Ethiopia. So great time to be talking to you guys. I'm going to go through the slides relatively quickly, but please do feel free to reach out with questions either directly to me or via FSD Africa to me or to Ryan Short, who's our lead partner on this practice. We love discussing this stuff. We love working on this because we believe it's really extremely impactful and incredibly important to get these topics right and to think about them as private sector looking to have sustainable impact in the countries that we work in. what we've seen as Genesis is really this changing role of business. So there are a number of global trends, social justice movements, climate change. We're in this kind of era of measuring outputs and trying to understand impact. Everyone is connected. And then, of course, over the last couple of years, the COVID-19 pandemic has really shifted the global landscape in a multitude of ways. And what we're starting to see from an investor perspective is that all of these are playing into investor decisions. Consumers are putting increasing pressure on investors and people making investment decisions. Employees internally are putting pressure on their employers to change policies and to change the way that businesses work. And all of this is starting to play out in the regulatory and policy-making space as well. And we're very excited about that. We're seeing increasingly some negative sentiments around capitalism and really the need for capitalism to rethink its current form, look for ways that it can do good while making a profit. So people are starting to expect business leaders to look at driving social change, driving environmental change, and being responsible, not just avoiding harm, but actively promoting good. We're seeing that companies' long-term success is starting to hinge a little bit on the things that they're doing from an impact perspective. And certainly in my part of Africa in particular, as the younger generations come into the workforce, there's increasing pressure on employers, to be able to show employees the kind of value that they are creating from a social, environmental, and governance perspective. How this translates to us in the financial services world and in the insurance world is really, there is a need to do things responsibly, to prevent harm, to create good, but also to be able to talk about that, define what our purpose is as it relates to environmental, social, and governance measures, and look for ways to build partnerships to address some of the challenges that we face in the country and across the continent in these regards. So by way of brief introduction then, what is ESG? Put simply, E is for environmental, S is for social, G is for governance. It's a set of criteria and standards that allow people to have a framework for understanding the impact and the risks of an organization beyond, as Kelvin said, just its financial performance. So I won't go through the full list in detail, but to give you a sense of some of these measures, when we're looking at environmental measures, we're looking at climate change, carbon emissions and tracking, biodiversity, deforestation and reforestation, and similar, all efforts that either prevent harm to the environment or promote good and positive impact. On the social side, there's quite a broad range of things that go in here, things like gender and diversity targets, customer satisfaction, increasingly data protection and privacy, and obviously from an insurance perspective, things like cybersecurity and cyber risk is a growing area of concern. And then from a governance perspective, I think obviously this one has been around kind of as governance standalone for a long time, so it's a bit more established. This looks at things like board composition, internal and external requirements around bribery, corruption, and lobbying, and protection of whistleblowers as an example. So it really does cover a range of topics, and it's very interesting to try and think about from a company and a country perspective, how do we think about which of these topics make sense for us to measure and track and to try and have an impact on. So why is it important? First of all, it gives a measurable framework. So this is a globally recognized set of criteria. It gives people a chance to understand how businesses work, but also for businesses to align internally and externally on the impact that they're having on sustainability. It provides risk analysis and resilience tools as well, because we're trying to understand risks more broadly. And these are not just, as was mentioned previously, this is not CSR. This is understanding the risks and the impact of the work that we do. Being able to understand that ensures the long-term resilience of a business, as well as of a society. It also is important because it provides the ability to do value-driven investments. And what we've seen is that investments made in line with these ESG criteria not only consider long-term financial sustainability, but also long-term environmental and social and governance roles and the sustainability that those create. But increasingly, we're seeing evidence that those help to drive value additionally to the bottom line. And then, of course, a long-term sustainability. So the social impact of ESG considerations then allows business practices to have increased impact. Interestingly, this is from a McKinsey survey a couple of years ago. Interestingly, we're seeing that the sentiment among investment professionals is becoming increasingly positive around ESG. So you see this chart, everything going up, and basically this is the share of respondents who say that environmental, social, and governance programs create value, both short-term and long-term value. And what we've seen from the work that we do is it's not just creating societal value, but this is also creating shareholder value. 93% of respondents say that social programs make a positive long-term contribution, and most people view ESG as having benefits for stakeholders over both the short and long term. And I think that's very important because often some of these measures can be framed as short-term negative, long-term positive, but increasingly we're seeing the investment community start thinking about these things as actually having both a short-term and a long-term impact from a shareholder value, from a financial returns perspective. And we hope to see increased evidence around this because I think it's really very important to be able to showcase the financial side of return of ESG so that it's not just a compliance mechanism. It's actually something that does return value to the business and has a business case to do. ESG is equally, if not more important for the insurance industry. So of course, I've spent a lot of time in insurance, and insurance by definition is about risk management, and ESG is really about trying to understand more broadly the risks that we face as a society. So insurers obviously play a critical role in transferring severe risks that do affect societies, and that role is played through the development of tools, products, services, and through the underwriting and investment practices. Additionally, though, it's of interest to the insurance industry because key stakeholders, such as institutional investors, are starting to demand greater ESG accountability from insurers. It's seen particularly as a reputational risk for these players, and so the insurance industry has to respond. ESG presents an opportunity for sustainable insurance products, which of course is what everyone wants. Globally, regulators are paying more attention to this and looking at ways to integrate ESG, particularly climate-related issues, in supervisory routines, supervisory review tools. Regulations on ESG disclosures are gaining popularity, and we've seen that globally. And then, of course, the importance of ESG in ensuring the sustainability of the industry is gaining global attention. So, for example, through UNEP-FI's principles for sustainable insurance. And of course, as things like climate change and the global discussions around climate change, smallholder farmer resilience, agricultural development and food security, as these things converge, insurance obviously plays a fundamental role in that, but understanding the nature of the risks is becoming increasingly critical to make sure that we get this right, we ensure sustainability and that we act responsibly. Of course, from an insurance perspective, it's just important to understand the risks. So pollution, climate change plays a significant role in all categories of insurance risks. There's a lot of talk around the excess deaths that pollution creates, for example, which of course plays a role in insurance. And then everyone is well aware of the climate change, biodiversity loss, and similar global discussions. Cybercrime and similar under the social side, increasingly important and increasingly difficult for insurers to keep up with. And then on the governance side, the real reputational risk, and we've seen this over and over where there's real reputational risk to companies because of the way that they've operated. We see in industries like mining and manufacturing, the need to create and maintain a social license to operate. And from an insurer's perspective, there's both the understanding of the risk, but also the understanding that insurers, especially in the African context, in many countries are often the biggest or some of the biggest investors. And so being able to design your investments as an insurer appropriately and responsibly is really critical. Additionally, we've seen ESG creating value in multiple ways. So this is from a McKinsey report way back in 2019, where they noted that ESG can create top-line growth, can reduce costs, can help with regulatory and legal interventions, can increase and uplift productivity. And then, of course, within investment and asset management, there's a whole movement around sustainable and responsible investments that ESG talks to. The work that we're currently doing with FSD Africa is really about trying to integrate ESG considerations into insurance regulations. And so what we're trying to do in this project with FSD Africa currently is answer three basic questions. What is ESG like in country? What is the adoption like? What are the attitudes like from insurers and insurance regulators? How can it better be integrated into considerations from a risk management, underwriting, capital adequacy process and insurance? And then how can insurance regulations or policies integrate ESG considerations? What should we be doing as an insurance industry? What should regulators and insurers' roles be? What should associations' roles be? And we're busy with FSD Africa trying to work through this in a couple of countries at the moment. That's it from me. I've got Ryan's details up here as the lead partner on this. Please feel free to contact him or to contact me with any questions that you have. As I say, we love working in this space. We believe that it's really socially valuable, in addition to being something that makes sense from a business perspective. Also feel free to reach out to us via FSD Africa. That is it from me. Thank you so much for your time and attention. It's been a real pleasure to be part of this session, and wish you the best for the rest of the day, and look forward to being in touch with as many of you as I can. Thank you.
Thank you very much, Mark, for making the time to join us virtually. I'd like to introduce our next presentation, my colleague, Elias Somondi. Elias Somondi has more than 10 years experience in developing policies and regulations in the financial sector. Just to mention, Elias also worked with the regulator in Kenya as well for a very long time. So he brings in lots of experience from the regulatory side, but also the private sector side. So Elias will be taking us through the role of innovation in creating a sustainable future. So please help me welcome Elias. Thank you.
Good morning. Good morning. So I was kind of competing on height, and I realized that I might be a bit taller than Emias. So right, it's great to be with all of you this morning, and I'm really happy to be in Ethiopia. I think this might be my 6th time here. I've been working closely with Atobele and his team, and I know you guys are in the right hands. So I really appreciate the time that we'll be taking through this. But maybe I want to start with a story, because when we talk about innovation, there's quite an interesting book, The Blind Man and the Elephant. I know some of you have read it. So I want to connect this with innovation. Now, these 5 blind men were given an opportunity to go and touch different parts of an elephant. And everyone through touch had a different idea of what they were really touching. So the first guy went in, and from the touch, he said that, I think that I was touching a snake. The second person kind of talked about touching a tree trunk. The other person talked about touching the wall. The other person talked about touching the rope. And the other person talked about touching the spear. Now, to relate to this elephant story, the first person that talked about the snake was kind of touching the nose of the snake. The other person was of the elephant. The other person was touching the tusks. So it kind of appeared like a spear. The other person talked about the wall because it was touching the stomach of the elephant. And the other person talked about the rope because it was touching the tail. So that is all about innovation. it depends with where you touch as a financial sector player. And ideally, these 5 blind men are your customers, because each and every person has a different feeling of how you kind of provide your products and your services to them as an industry. And the key thing is that, can we be able to make them really, through that touch, through their experience, to get the rightful customer-centric. And we've seen how innovation have kind of really translated and kind of changed the way people perceive financial products and services. So today I want to talk to you about the role of innovation in achieving a sustainable future. So I'll have a couple of slides, and maybe I will start from where I see the opportunity. And Ethiopia is quite an interesting market, because if you look at the population size, Ethiopia is currently termed as the second largest country in Africa. And that basically tells you that there's a very huge opportunity as long as we could tap innovation into the financial aspects within this particular market. We talk about a very huge GDP of around 106 billion, whereby there's per capita of around 1,059 as at 2021. And the annual growth over the last couple of years is around 10%, which basically gives us an indication that Ethiopia is really taking the right trajectory when it comes to issues around growth of this particular market. Now, the financial sector, and that is something that has been mentioned by the previous speakers, of around 18 banks, there are around 40 plus MFIs, there are about 5 leasing companies. So there's a big chunk of financial players that are already in this particular space. But if you look at around the percentage of adults that are currently having a financial account, that is around 45%. And if you look at around the insurance penetration in Ethiopia, it's below 1%, which basically it runs between 0.4% to around 0.6%. And that's where I see a lot of opportunity, because it means that there's room for growth, given where the market is currently at. Maybe just to look at comparing that with the African population. Now, the African population is estimated to be around 1.34 billion people, which basically forecasted that it will kind of rise to around 1.87 billion by 2035. And that basically tells you that we are looking at a very big growth within Africa. Now, by 2050, we are estimated to have around 945 million people under the age of 25. And if you look at these particular persons, they are people that will highly use innovative financial products and services. And that basically tells you, if you kind of look at the Ethiopian market, it's highly growing with so many young people coming into this particular space. So it's important for the insurance market, the banking sector, to kind of think, how do we tap this young population? Now, Africa has the biggest pool of tech-savvy young people on the globe. And if you look at that, it's basically twice as much as what you see in South Asia and also in Southeast Asia. So ideally, Africa is on the right trajectory as long as we are able to create these particular innovative solutions. By 2020, we kind of managed to get around, around 548 million people basically using mobile phones, which was around 12% growth from the previous number. So that basically tells you again, if you could use mobile services, this will give us an opportunity to basically tap into this market that really needs the big change. Now, we need to talk about then, how does this connect to sustainable finance? And when you talk about sustainability, Kelvin mentioned issues around climate, issues around natural capital. The key thing is that over 70% of jobs in sub-Saharan Africa are related to natural environment. And this basically connects to, as long as you come from any village, the first connection that you have is with your farm, right? So that basically tells you that if our much of the jobs that we do are connected to natural environment, that there is need to protect this natural environment. And we cannot protect this natural environment without using technology, particularly the way maybe our forefathers used to farm. We need to look at it differently as how they do their farming at this particular moment in time. In time, are we able to ensure that we create resilient solution around them? There's also issues around the natural capital. And Ethiopia, about 40% of Ethiopia's total wealth comes from natural capital. That basically gives you that there's need to really look into some of these particular exposures that we are currently facing within this particular continent. So sustainable finance has, in a way, moved out of what we used to see it previously, and currently we see a lot of innovation within financial instruments and products and services. That means that there is need to put investments into these financial instruments, particularly ensuring that they kind of take aspects of innovation around them. Maybe let's look about some of the challenges that we face, and I'll look at it from two aspects. Just consider the opportunity that is currently in Ethiopia. We are talking about 0.4 to 0.6 penetration of insurance, around about 45 people that are within the adults maybe have a bank account. So we have a huge number of people that are currently still unbanked. And that basically brings a number of challenges that we need to kind of think about. So think about affordability, both from the insurance product side, also to the lending side, because SMEs will require a good return, also basically get good lending rates. And out of this, then the key important aspect is to look at how then innovation can ensure that financial instruments and financial services that are provided to these particular persons become more affordable. There are issues around distrust, given that, and you can relate it back to the story of the elephant. Remember, no one got the right answer of what they were touching. And ideally, there's need to move from what we call just perceived value of financial products to the experiential value. So how is the experience of these particular customers going to be as financial players? So importantly, there's need to build trust, and innovation can be one of the key components that will enable the financial sector to build trust. There's issue around information. There's a lot that needs to be done around financial literacy. There are various companies that are trying to push around educating their customers in financial products, and this cannot be done rather than basically creating tools which are highly innovative to enable these particular persons to get the right knowledge on what they are basically purchasing or what they need to purchase, because also just providing knowledge enables the customers to know what they need to get going forward. Budgeting is also a key thing that is currently we kind of see, and there is much that needs to be done. And particularly if you look at the African continent, most of the time, if there is a disaster, you'll get that there are different drives that are required to ensure that some of these risks are managed. So if you can kind of come up with a way whereby we look at even private-public partnerships to deal with some of the risks that are currently can impact this particular continent, that will be of greater value as an industry. Then if you look at the other side of the bargain in terms of where you sit as a financial industry, we kind of look at the way you acquire that business and the way you kind of provide the value to that particular customer. The current processes and practices only gives you very low margins. And that basically means that without really changing the business processes that you are currently operating, then issues around sustainability will be an issue that you cannot really be able to address. So there is need to look at how we can manage our financial industry, given that there are low margins that are experienced through some of the business processes that we are currently undertaking, and that in one way or the other, innovation will be able to provide you as an industry to gain the rightful value. At the same time, you will be able to get the the reach that is really required in this particular market. So ideally, there is an effective market reach across the continent. We also need to look at how then we aggregate with the people on even different sectors, because lack of aggregators is a key thing, and we kind of see that tech providers can be one of the aggregators that the financial sector and the financial industry can use going forward. There's also lack of data, and this is also enhanced because the way we collect our data at this particular point in time is of a big challenge, because most of the time data are collected using traditional channels. You ask people to bring paper, and most of the time you might need to have a very big warehouse to keep that data. And ideally processing that data to give you better insights in the future is something that always will be a challenge. So there's need to look at how then we can use the right data, we can collect this data and make sure that this data is able to enable us to create the rightful products in the future and create the sustainability that we need in this particular continent. So it's important also to think about the digital transformation strategy for Africa. And this particular transformation strategy looks at 5 important components that also we need to think about as an industry. The first component is about enabling environment. And the enabling environment context need to come from the regulatory environment, but also within the context of the financial players. They need to be able to ensure they are flexible and responsive to these particular changes that will be made around the environment. So there is need to also look at the policy and regulation, particularly in enhancing and encouraging innovation within the sector. There's also need to look at digital infrastructure around internet connectivity, mobile phone penetration across the country. There is also need to look at digital skills. We need to build skills, not only with the outside the industry, but also internally. Have you set up innovation hubs as a company? Are you able to gain the rightful skills? Because with innovation, it must have a very clear approach. And a top-down approach will be quite holistic, given that you as industry leaders really look at innovation as a very important facet within your institutions and growing the skill set within your companies. And also digital innovation and entrepreneurship, how do you encourage that within the context? So in this particular aspect, then it's important to kind of look at how the financial industry can create an innovation, I would say, hub or a digital sandbox whereby you can test solutions that will be able to impact this particular industry in future. At the end of the day, we have what we call the Smart African Alliance, which basically brings around 30 countries in Africa. And the key thing is then how do they accelerate sustainable socio-economic development in the African continent, particularly on ICT use and access of broadband services. So that is something that also we might need to think about as an industry. Can we develop a digital transformation strategy for Ethiopia? Or maybe can we just even zero it and zoom it in, whereby we can have a digital transformation strategy for the insurance market, or a digital transformation strategy for maybe the banking sector. So maybe I just want to talk about a couple of enablers, because within this context, we need to think about what will enable us to move forward as an industry. Now, there are different factors that we need to think about within this particular ecosystem. The first particular ecosystem is around infrastructure. Are we able to create and enhance market efficiency, particularly through a number of infrastructural issues, access to electricity, issues around access to mobile phones, issues around adequately priced digital connectivity. I'll be able to tell you that Ethiopia, particularly through the Wi-Fi costs in Ethiopia is much lower than so many other countries in Africa. If you compare with Kenya and compare with South Africa, Ethiopia basically provides the Wi-Fi cost at a very low rate. So that basically shows you that there is an opportunity for you as an industry to tap that particular infrastructure and create the rightful change within the sector of innovation. There's also a need for a strong talent pipeline to spur innovation, particularly within the incumbents. Now, when we talk about the incumbents in this particular case, we are talking about you as the financial sector players. How then do you ensure that there is strong talent pool that will spur growth, particularly by introducing innovative products and innovative services within this particular market? There's also need to engage market engagement enablers, and in this particular case, we need to think about how do we train those particular persons. How do we ensure that we have a digitally and financially literate population who are ready to take up innovation? And that might not be done by only one institution. It might require a holistic approach to enable us to have these particular enablers within the market. We need also to think about availability of appropriate and ready aggregators. Are we working with partners? Are we working with the fintech sector? Are we working with the insurtech sector to create the rightful change? Also, we think about access to finance. And Amaya has talked about TAs and grants, whereby we need to see how then we can provide access to finance for innovators, and also basically taking them through the development life cycle. So there are so many things that we might need to think about when we are talking about sustainable innovation. Also, we need to create an enabling test and learn regulatory environment. And NBE, I know they'll be looking at this keenly, how they will enable to create a sandbox environment for you to test your innovations within a controlled environment, also to contain the market failures, because we have to also be careful not to create systemic risks that might impact this financial market. So supervisor support is also important for new market entrants. Are we going to look at an opportunity whereby we are going to ensure that there are no barriers to entry within this particular financial market? So it's important to think about this innovation ecosystem going forward. So maybe just to kind of put some two key aspects around the underlying infrastructure in Ethiopia. Mobile ownership in Ethiopia has grown substantially over the past decade, and we've seen that only less than 40 adults within the 2021 owned a smartphone, so we owned a mobile phone. So we might need to increase that to a particular number. Maybe as an industry, we can look at how do we increase this to around 60%, because some countries that you are currently competing with, for instance, Kenya, this particular growth rate is around 80%. So there is need to provide access to these particular services. Again, on the internet, one of the key things that I mentioned earlier, it's cheaper to use Wi-Fi in Ethiopia than in South Africa and Kenya. If you compare that cost, it's around $1.71 in Ethiopia, and Kenya is around 2.25, and South Africa is around 2.67. So that gives you an opportunity to tap that particular component and to push your products through that particular channel. Maybe some of the key strengths and barriers for innovation in Ethiopia that we might need to think about as an industry is that we know that we have an underlying infrastructure. There it is existing. The key strength is that there is affordable data costs within this particular country. There is relatively high smartphone penetration as a proportion of the overall phone penetration. So that's an area that could be tapped. There's good mobile network coverage across this country. And also there is an innovative payment ecosystem that has already been aligned in Ethiopia. Some of the challenges that we might kind of need to address going forward is low and limited supply of electricity in some parts of this particular country. We need to think about mobile internet usage that is still low, even though we might need to also push this outside the cities because it's highly concentrated in the urban areas. And also there's that weak reliability on existing payment infrastructure. We are still using a traditional payment infrastructures in this particular country. Strong talent pipeline, and I think the strength is that the ecosystem has significant players that will develop the startup ecosystem. I know there is an Ethiopian Association of Fintechs, and that's a very good pool of talented people that needs to be tapped within this particular context. And also there's a lot of skill training that is currently happening through the same program in Ethiopia. The only thing is that there is still lack of pool of innovators, particularly within the insurance sector. We need to kind of grow a pool of insurtechs, innovators that highly focus on the insurance side. There's a bit that has already been done on the banking side, but there's a lot that still need to be done in terms of providing knowledge and even skills to these innovators. Maybe thinking about starting some competitions within the universities to encourage innovation within your higher learning institutions. Access to finance, maybe talking about some barriers and maybe giving some context to what we see in terms of investments in fintech. You know, Africa only got around 0.2% of all fintech investments that was coming across the world. And it was not that the money wouldn't have been invested more in Africa. It was that there were lack of these innovations that the international community would have invested in. So assume that we got innovators in Ethiopia. That means that you'll be able to attract finances that would be used to get these particular innovations off the ground and to make them change this particular market. So also something that is we need also to think about funding because we are highly looking at this funding being limitized to the international setting. So is it possible for the industry also to think about funding some of these particular innovations going forward? Also, there's lack of financial ability amongst the financial institutions, and there's low appreciation of research and design. I don't know how many companies do put a lot of effort to just try and think about what will the customer of the future be thinking about. So can you think about your customer, the customer of tomorrow? Because the customers that you are addressing now will change based on his customer preferences, how we want to access his products, and that basically means that we need to always be doing our research and design. In terms of market engagement enablers, we have a very large young population here in Ethiopia, and basically we need to tap into this growing component of these particular young persons. I know most of the time we talk about gig workers, and that is what is happening with most young population nowadays. We are basically running what we call a gig economy, and we need to know how then we tap into this particular market. So, for instance, we need to also deal with issues around poor literacy rates, large rural population that is also highly existent, and also perceived value of financial products. And again, you can go back to the story of the elephant, given that the person that might have touched the trunk might have feared for his life, because some of the insurance products or the services that they get there, it's more scary, and we might need to think about reducing that particular gap and ensuring that there's a bit of customer centricity. We also need to think about alternative and digital distribution channels. We need to evolve our channels to more modernized channels to create the experience that these particular customers need. It will be a big challenge when you talk to the young population and you tell them that they need to provide so many documents, yet nowadays they manage the economy through applications such as WhatsApp and TikTok. Maybe you just need to use TikTok as an insurance company to sell your next product. Or maybe some companies have not even gone to use of such applications. So it's very, very important to start thinking about different applications, social media applications, that could in one or the other be used for even carrying your assessment or your risk assessment to some of the customers that you are currently having in your books. So just to end is that we are working closely with the NBE, particularly on supporting, regulating for innovation. And we are currently setting up a context whereby we are going to build what we call an insurance innovation portrait. And what we'll do on this particular project is to look at how we can accelerate innovation in Ethiopia and also support the entire ecosystem in creating the rightful change that this particular market needs. And in this particular context, we are looking at it in two different aspects, whereby we are looking at it on the market development side. In this particular case, we are going to encourage and engage different stakeholders in a way that we will enable innovation to be one of the key issues that will be discussed. We are also going to look at protection, whereby as innovators will be developing their innovative solutions, we are also aware that innovations come with risk. And we need to see how then the industry players will be able to assess and to do an assessment of these particular risks to ensure that the market is not exposed to the systemic effects of risks such as cyber risk. So we'll develop different tools in terms of engagement tools within the existing industry. In this case, then we'll open a number of communication channels. We are going to create a program that will enable you to gain the rightful knowledge within this particular market. We are going also to create bilateral engagement with different industry players, just to ensure that there is proper knowledge that is being passed around this particular context. At the same time, basically enabling new market entrants. Are we able to encourage innovators to come into this particular market? And these particular innovators will give you an opportunity, what we call a strategic partnership opportunities that will transform this market going forward. So we are going to use a couple of engagement tools, and soon we'll be passing that particular report to the NBE, and also we'll work closely with FSD Ethiopia to see how then we are going to engage that particular context of those particular tools. The second component is around the regulatory tools. I want a framework that will enable the industry to innovate. Most of the time, one of the key things that have been mentioned with so many players in different markets is that there is lack of regulatory clarity on what they need to do as a sector. We are going to look at how then we are going to create proportionate but fit for purpose regulations that will support innovation, at the same time closing those particular gaps that are currently existing. We are going to look also highly principle-based framework that will address the customer outcomes. We want customers to get the right outcome out of the financial products and services that they are getting at the moment. At the same time, just streamlining some of these supervisory processes. How long does it take to approve a product, a financial product? Can you be allowed to pilot some of these particular products? Because at times, you might just need to know how your few customers that you want to pilot with in a particular financial product will be able to perceive your products. Also around flexibility, and we'll be talking about sandboxing, test and learn approaches on how to address some of these particular components. So we are going to engage the industry at terms of developing engagement tools. We are going to develop our regulatory tools, but also the supervisory tools. So it will kind of look at the entire ecosystem that the industry and also the customers will be experiencing going forward. I know we will be discussing further on what we've done and what we are going to do. We have already initiated some of these particular projects in countries such as Kenya, Nigeria, and Ghana. And we've seen how it has impacted that particular market. We've seen some of the innovators that we engaged, for instance, in Kenya, have gone ahead and are working closely with the insurance companies. They have been writing a lot of premiums that they do pass to those particular insurance companies. The regulator has gone ahead and developed a robust sandbox framework, and currently we are working on ways in which we can also engage them in terms of introducing things such as microinsurance tools for managing their risks going forward. Also, we've done some work in Nigeria, particularly through the Bima Lab and Ghana, and we've seen a lot of results out of this particular engagement. So I believe that we are ready to work together, and we'll be engaging you together with FSD Ethiopia, and I know Emias is ready to help us and help us work with you to ensure that we create a sustainable future for this particular continent and also for Ethiopia. Remember, the future is for the young people, and if we cannot really make this environment and this world a better place, then we'll not be leaving them with something that they'll be proud of in their sundown days. So thank you very much, and let's innovate and let's make sure that we are able to create the rightful change that is needed in this particular market. Thank you very much.
Thank you very much, Elias. That was a very good presentation. Lots of opportunities for us here in Ethiopia, and we should tap into them. So our next presentation is actually very interesting, and it's on geothermal risk transfer. It's a project that is being implemented in both Kenya and Ethiopia, and it will be good to see how we can actually support and also take up the opportunity. So I'd like to introduce Darrell. Darrell is the head of geothermal. Some of you might have worked with him already. He was the CEO of Tulumoyo Geothermal Investment SPV here in Ethiopia. So he has lots of experience here in Ethiopia. So please help me welcome Darrell from Pahelion. Thank you.
So Salamnish, Salamno, Salamna. Good morning, everybody. Thanks to Zilla for the introduction. Thank you to our hosts, National Bank of Ethiopia, United Nations, Environmental, UNEP, sorry, and of course FSD Africa. And is my presentation not up, by the way? FSD Africa and the newly announced and officially launched FSD Ethiopia. So you will recognize, hopefully, this map, and sorry, a bit of context and background. So I've been fortunate enough that 25 years ago, 1997, 1998, I was able to live and work in Ethiopia. I helped build Ethiopia's first and still only geothermal power plant at Olutalangano. And as Zilla mentioned, I was chief exec of Tulumoye geothermal development from 2018 up until last year. So I've spent about 4.5 years in Ethiopia. I am very passionate about geothermal energy. You know, it's green, clean, there is no downsides to it. And I'm glad to be involved in the sector. Indeed, my daughter's name is Geo. So that's a sign of how committed I am to it. You'll recognize the map of the Rift Valley and Ethiopia, even though the borders are not overlaid. So Ethiopia is truly blessed with significant geothermal resources in addition to its hydro. For scale here, there's 22 developments, I think there, 6 of which are being progressed by the government through Ethiopian Electric Power, and the other 16 through the private sector. There are probably 10 or 20 other kind of license areas and potential geothermal resources in addition to those. So the purpose of me being here is to talk about the insurance market. Not that. Okay. I always get this wrong though, sorry, in terms of scale. So talk about geothermal risk and the participation of the Ethiopian insurance market in that. So FSD Africa program, you've been well introduced to that launch event yesterday. Went very well for those of you who didn't attend. I'm sure you'll have seen it on your TV screens or heard it on your radio, or been able to read about it in the press this morning or the press over the weekend. So Parhelion are collaborating with FSD Africa and FSD Ethiopia to run a program within Kenya and Ethiopia to try and build capability and product expansion in the market. Thanks. So my name's Daryl. As I said, I work with Parhelion. We are a UK, a US, and now Kenyan-based boutique insurance underwriting and brokerage. All green. We only look at green insurance products or green energy financing. And we have a partnership with a company called Chembright in Kenya, who are a brokerage and have been involved in the Kenyan market for almost 30 years now. So the objectives of the program, I mean, essentially, most of those geothermal developments that you saw before, over the next 3, 5, 10, or 20 years, are going to progress, whether they're public sector led or private sector led. They are going to need and want insurances to de-risk equity and debt, or even to attract that equity and be able to progress. The same goes for the government's PPP pipeline for infrastructure investments. So it's not just relative to geothermal. It's equally relevant to project finance type deals in infrastructure investment, be it ports, pipelines, roads. So rather than this underwriting capacity and these premiums go offshore, the idea of this program is that we retain them within Kenya and Ethiopia. So we'll be running. I'm going to talk about this in a lot more detail this afternoon in the graveyard shift after lunch. So I do hope you stick around. This is really just an introduction, but the program involves capacity building, training, ideation workshops, with the aim of developing the capacity and expertise and underwriting capital within Ethiopia. Thanks. So opportunities. I mean, the last 2 years have probably been quite crappy for you all as insurers with COVID, and I'm sure you've had quite a few knocks and hits. So it's an opportunity for a new product line. As I say, as infrastructure investments are delivered in a new way in Ethiopia, they're going to need project finance type insurances, and better that it's everybody in this room are providing those services and retaining that income than it all going offshore as it currently does. So I'll discuss in more detail this afternoon. I know that there's any questions, but I think we'll keep the Q&A until this afternoon. So namasaganalo.
Thank you very much, Daryl. And on behalf of FSD Africa, I also just want to invite you as insurance company leaders to illustration of a really important opportunity for you to contribute to green growth and to the renewable energy sector here in Ethiopia. And so what we are wanting to do, as Daryl said, is to set up an underwriting facility, an underwriting pool that is comprised of multiple different local Ethiopian insurers that can underwrite international investment into the sector, because what we see is that, as Daryl was saying, you need de-risking solutions for international investors so that the risk-return profile of their investment makes sense. And there's a very low risk but high impact kind of scenario in development drilling in geothermal solution that de-risks it for international investors and also local investors. And so we're quite far along the road in setting up this underwriting pool in Kenya, but we would like to do exactly the same thing here in Ethiopia. And so this is a wonderful opportunity to do something innovative, to do something new, and to participate together as industry in enabling further investment into geothermal. So we warmly welcome.
Thank you very much, Daryl, Calvin. That's the end of the presentations for now. I would like us to take a quick break, get some coffee, get some tea, get some refreshments, and then we'll be back for a very interesting panel discussion whereby some of the industry players here are actually implementing very innovative products. You also get to learn from them and hear how we can partner among ourselves. So thank you very much. So yeah, we'll take a quick break and then come back. The tea is served right outside. The washrooms are right around the corner. So yeah, thank you very much. See you after the break. I hope you're all refreshed now. We are moving on to the panel discussion. Participated as well. My colleague Teddy will be helping Harry. Please feel free to do so. We'll have someone who can help with translation as well. So you just need to make it as participatory as possible. So Teddy, please just, yeah, thank you. So I'd like to request Elias to come up, and then he will be introducing the panel as well. Thank you very much.
Great. I hope you heard, and we are basically getting to the gist of the discussion, and we are going to have a very interesting panel. And ideally, we want just to kind of bring into context issues around sustainability. And, you know, we've kind of given some snippets of environmental, social, governance issues. And I know there's a lot of work that the industry has been doing, particularly in ensuring that the ecosystem, the financial ecosystem, both banking and insurance, is kind of really aligning itself to create the meaningful change within this particular industry. You know, technology, and the key thing that we were asking ourselves is there potential for this tech-enabled finance to be realized? To what extent are the new structures will be blended to assist in terms of exploring and speeding up issues around sustainability? Now, there are key facts that maybe we need to also highlight, and I'll be introducing my panel soon, and we kind of discussed issues around vulnerability in Africa, particularly on climate change. Around 30 out of 40 most climate vulnerable countries are highly in Africa. We've talked about around 23% of Africa GDP basically is dependent on nature. So our natural environment really plays a very critical role in managing issues around sustainability. So let me then call my panel to join me, and you'll kind of forgive me if I don't pronounce the names right. I'm learning to pronounce some of these names. So we are going to discuss issues around ESG and kind of look at what gaps are there, what opportunities are there, and even broadly look at issues around risk management and innovation, particularly connecting that on how then do we build resilience within our financial ecosystem or within this particular context. So I want to call upon Getenesh Haile Mariam. She is the Managing Director of General Insurance Brokers and Consultants. Kindly join me on stage. We can appreciate as she comes on stage. I'll call upon Munir Duri, CEO of Kifinya, to join me on stage. In fact, when I was having tea, I was told that there's a lot of innovations in Ethiopia. So we'll be hearing much in that particular context. I'll call upon Solomon Zage to join me on stage. You know, Solomon, I interacted with Solomon so many years back, I think 10 years ago, and he's been doing a lot of work around microinsurance and agriculture insurance here in Ethiopia. Then also I'll call upon Victor Malu, Director of Features System Consulting, to join me on stage. Great. So we have a very good panel with us today, and before we kind of start this, the overall objective of what we want to discuss is to raise awareness amongst the financial players, sector players, of the importance that they play in building resilience and ensuring that we have an inclusive but healthy financial sector in terms of managing the risks that do impact this particular market. So before I do that, I want just to kind of allow them to tell us what they have been doing for the last couple of years they've been around this world. With Gatanesh Haile Mariam.
Thank you so much for giving me this opportunity. As you have mentioned my name, Gitanesh Haile Mariam. I'm the Managing Director of General Insurance Brokers, who is in the business for the last 25 years. We are going to celebrate the establishment very soon. Previously, I was working with Ethiopian Insurance Corporation in various capacities, from an underwriter to, so I have touched, I mean, I can say every field, and went for insurance trainings and workshops abroad and locally. I do believe that insurance is towards my heart. So that's what I have stayed in the business for such a long period of time, because I don't know, it is just, you know, I feel the responsibility and I give some sort of guidance to the public. That's why I was used to work in Ethiopian Insurance Corporation, and then again to enhance the service, engaged and established this business. So we are good at giving the service, and hope we provide in future as well. Thank you.
Thank you, Haile Mariam. Munir, kindly introduce yourself and tell us what you've been doing in this particular sector.
So, good morning, everybody. I'm founder and CEO of Kifinya. We are organized in 4 verticals with about 455 employees. We work in marketplace for micro and small enterprises. We provide access to market, and we train around 5,000 people. I'm in MSMEs a month, transitioning them from conventional sales to digital sales. So that's our first vertical. The second vertical is we have a supply chain finance combined with last mile distribution, where we enable smallholder farmers access against a contract farming agreement, access credit, insurance, agronomy services, and we offtake their produce and provide it into the retail market. While on the retail side, we aggregate produce and fast-moving consumer goods for a retail network of about 4,500 agents or retail agents that we provide access to finance for them to buy and expand their businesses. That's our second vertical. Our third vertical is mobility, and we do long distance services, and we enable 280,000 people book and buy tickets to travel to 288 destinations. For this purpose, it is our financial services vertical, and there we have three units. The first unit is credit. So we have a credit scoring platform that has about 1 million plus data set over the past 5 years, where we track growth and employment within the micro and small enterprises. And we have a psychometric capabilities within that credit analytical platform, and we launch it in partnership with First Bank, the first uncollateralized digital lending for micro and small businesses. We have another 4 banks that we are working with to launch more products. The second is in payments. We have a voucher system that the Minister of Agriculture uses to reach 290,000 smallholder farmers with input credit vouchers. For insurance, we have been in the sector for almost now 6 years, where we developed the first private-led product that is based on taking satellite data, indices, vegetative indices, and turning it into the ability to measure risk. And our first product has been micro insurance with two insurance companies, Ethiopian Insurance and Oromia Insurance. We enable them underwrite that risk. This is what we do in general, but I'll come back to the insurance.
Solomon.
Thank you. Okay, my name is Solomon. I'm working as a microinsurance and agricultural insurance business division in Niala Insurance. Well, much of my experience is dedicated to agriculture and microinsurance over the last 14 years. As you know, in a country like Ethiopia, where the largest proportion of the population is under both low income as well as poverty, microinsurance is serving both the social aspect, social protection program done by the government and the donors. So where much of our effort, dedication went to just providing microinsurance as a social protection program for the people under poverty line and the business case that is under trial or under experiment. So my company works on 3 basic business pillars: the general, long-term or life, and microinsurance. With respect to microinsurance, though it is not making profit or scaling as expected, but still our involvement and engagement continues, though it is unprofitable or bleeding us. So partly we are just carrying or discharging our, call it the corporate social responsibility, or the ASGs that we are going to discuss. With regard to the market and also overall reach, still, as Elias in the morning indicated, the Ethiopian insurance industry is at a very infant stage, with penetration level of less than 1%. Though the economy is expanding, still we are at very low stage. So a lot is expected from us. In particular, with poverty level of 80% currently, Ethiopia has got like 120 million population. So the number of people to be served both by business case microinsurance and social protection microinsurance is quite large. So there is ample market, there is huge market, untapped market that we can work on it. It is very unfortunate that despite the industries comprising like 80 insurers, only 3 or 4 are engaged in microinsurance. So I think we need to reconsider and also engage in microinsurance business so as to increase the penetration as well as the outreach of microinsurance for the low and excluded section of the society. I thank you.
Victor, you can take it over.
Thank you. Thank you very much. My name is Victor Malu. In a previous life, I was a banker. I think I'm the odd one out. I worked for Barclays for 10 years in various capacities in strategy, alternative channels across Africa. Before that, I was with Citibank for 7 years. Before that, with Credit Agricole in Dos Suez for 8 years. So quite a long period of my life was spent in banking. 10 years ago, I left banking and joined FSD Kenya as head of future financial systems. I was responsible for managing innovations, market infrastructure, policy and regulation, affordable housing, payments, etc. So that has been my area of expertise over the last 10 years. I'm excited to be in Ethiopia supporting FSD Ethiopia as a technical advisor. Thank you.
Thank you very much, Victor. So I'll just start from that particular energy. You've mentioned the number of years that you've worked, and ideally what basically comes in mind is that out of all these engagements that you've been having across different countries, can you basically tell us the state of awareness, particularly within the integration of normal risk management practices, then kind of even build on issues around sustainability, ESG. What have you seen across the continent through the engagements that we've been having in these particular interactions in these different countries?
Thank you. Thank you very much. I think what I've experienced is disparity in terms of where different countries are at. I think I could talk briefly about 3 countries. I think Nigeria is one country that has started the path. The regulator issued a circular in 2013, basically providing guidance, and I'm talking mainly about the banking sector, providing guidance on sustainable finance. In terms of implementation, that's a different conversation. South Africa also, I believe in 2019, the National Treasury also issued a technical paper. It focuses a lot on climate change, but again, the guidelines have been provided for sustainable finance. What I'd really like to talk about, if you give me a minute, is Kenya, because I think Kenya is a bit interesting in its approach to this challenge. The way the Kenyan industry has gone about this is it started to regulate them. They're saying, please come and keep us on the straight and narrow, because we already have the framework, the structure, and we've implemented it, but we feel that there's a need for a regulatory and policy framework to be developed around this. Thank you.
Thank you. That's quite interesting. You brought in the context whereby leadership is key, and basically enabling the industry leaders to take charge and kind of prioritize on key issues that needs to be done to inculcate these particular issues around sustainability. So maybe I just want to, and this question will go to Solomon, and also Haile Mariam will kind of chip in into this. You've mentioned that 3 companies do engage on microinsurance, and I wanted to just get that from the context of climate change. You also mentioned issues around drought, and there's need to increase resilience to the farmers. What is the current state of awareness? Is the industry aware that there is a big opportunity, and what do you think need to be done for these other players to come into the flow and basically join these interesting times whereby we need to provide and increase resilience to these farmers? Maybe you can just give us the state of awareness and how we could integrate some of these particular factors within the context which Yala has been playing.
Thank you. From the awareness point of view, I think the very important point is that in climate insurance, when you define in Ethiopian context, it is tantamount to agricultural insurance, which falls into livestock and the crop part. Much of our effort in Ethiopia is dwelling on donors-led model, where the technical and the financial assistance is provided by donors. So, like 4 of the companies, which are just engaged in microinsurance, are engaged in index-based insurance. So the index-based insurance, this very characteristic is that it is providing just cover for drought, either for the pastoralists or for the farmers under the threat of climate change or drought. So what happened is that because this sector is not profitable, it cannot attract other players to engage into this business. That's the first point. Second, this sector requires knowledge, like actuaries, you know very well. We don't have the technologies also to capture big satellite data, compute it into usable ways, and provide the required service. The other important problem is that the knowledge and the awareness level of the beneficiaries is also at very low stage. People didn't know what insurance is, leave alone the index, the complicated one. The traditional one is not very much known. The other important issue is also on the part of the industry, where the industry is not as such lucrative, or the business is becoming attractive for others to engage. Why? Because we don't have first-hand data. This was explained in a different venue, that in order to engage into microinsurance, particularly to the index-based, where we serve the people at the bottom of the pyramid, we need to have the data, the market research, and also we have to segment which section of the society to be served by social protection microinsurance, which one is to be served by the business case microinsurance. So as a result, things are as such not clearly, explicitly known so as to engage others. With regard to awareness of the climate change, well, it is well perceived, but analytically it is not computed in the integrated into their company system. So what is available for most players is that the ground is open for everybody. So every players or industry players can participate in it. But before we engage, before the engagement, I think there are some things to be cleared. The first, from a regulatory point of view, we have got the distribution channel for microinsurance. There are some issues like the credit life insurance given for the microfinance institution, which we raised in a number of issues, like the training, building the capacity, and so on. So if these nuts and the bolts are assembled, I think there is ample market that can serve and where all the stakeholders can benefit from the sector.
Great, and just want to jump to Haile Mariam. You have a lot of experience in terms of engaging customers from the insurance industry side to now as an intermediary. How do we create this awareness, and how do we integrate some of these factors that will support climate change, that will support social issues, such as those people that are inherently excluded to be included? How do we enable, particularly with the farmers that maybe Solomon has mentioned, how do we increase their resilience in terms of managing the risks that they do face, predominantly on climate change?
Thank you. When it's come to awareness, which is a key issue, because people have to be educated in order to mitigate the risk, or even to be motivated to transfer the risk to those who shoulder the risk, like the insurance companies. Specifically, when it's come to climate change, not only the public, but also the players like insurance companies should be aware of what they are prepared to do, because this is, except 2 or 3 insurance companies, if I'm not mistaken, the remaining are, they are not even prepared even to commence in giving that insurance. And besides, the government itself, now Ethiopian population, as you know, 80% of Ethiopian population is highly dependent on agriculture, which means for the internal consumption as well as to get foreign currency from abroad. So now, during this drought season, which causes ultimately famine, there is a lot of migration or displacement from rural areas. Those who can live by themselves, now they are becoming dependent on the government or on the community, especially on the cities. So having this, big problem, in the country, which recur every 10 years because of the climate change or because of war or, security issues, okay? So the government have to play a pivotal role in curbing this situation, because if we simply pass this, or as if insurance companies can come up and cover, no, insurance companies are not, strong enough to shoulder such a risk. So with the government side by side, or leading, or even taking the leadership, having a big stake at that, we can mitigate, or we can, in future, we can do something which the farmers will not be deprived of the or the livelihood which they live at the time of harvesting, or at the time of living their livelihood. So most importantly, awareness to the government, to the insurance players, and to the public at large. And secondly, there must be some sort of policies which have to be set in order to drive this into action. That's what I'm thinking.
Thank you. Quite interesting sentiments from Solomon and Haile Mariam, ideally indicating the importance of collaborating between the public and the private sector, but also just creating some form of awareness to the people that are highly vulnerable to some of these particular risks. I want to jump to Munir. You mentioned a couple of interesting aspects of what you do as an institution, from access to issues around the last mile distribution, to issues around credit scoring. If you look at all these components that you're trying to put together, how do you integrate ESG or environment, social, and governance issues amongst the decision making as you provide the services to Ethiopians? How is the integration process, given that you are basically trying to bring all these particular elements together?
I think, I mean, I can only speak to the sector I'm in. And if you look at the challenges around resilience and risk, it really boils down to note the potential of the market. The potential is, I think, established. It is what will unlock that potential, or what would that unlock that market. We see several deficiencies in this market. The first is appropriate products. So if you look at agriculture, there's only one product that Solomon has raised that looks at drought insurance. We have been doing that for 5 years, enabling 2 insurance companies. And the feedback from the field is the smallholder farmer is not interested in index-based insurance that only covers the risk of replacing his or her inputs. So appropriate product would mean something like an area yield index that can scale. And then there is multiple challenges there. So the first challenge from our studies and feedback is ability to pay of the smallholder farmer. So that has to be solved if you want to mitigate risk against climate. The second factor is around who underwrites. Insurance companies don't have the risk appetite or understanding of that risk to underwrite it. So if a solution is not found, and from our learning, what we have seen is that in the agricultural space, unless an agricultural risk facility is established that addresses, on one side, farmers' ability to pay, which means providing a certain level of subsidy on the premium, and on the other side, allow insurance companies increase their appetite for risk. So if you see that innovation needs to happen, behind it needs technology at the end of the day. Technology that interprets the risk to look at the interpretation of various data, whether it's satellite data, analytical data, and that's what we do. We have the capability of, I think, 15 years of weather data and satellite data that we look at, and we now have a product that can measure area yield index. So one way of looking at agriculture is that when you look at non-agriculture, and if you look at, again, products, again, you have to look at markets. When you talk about resilience or risk, Ethiopia has, Addis Ababa and surrounding has 300,000+ migrant workers that cannot access work because they cannot come up with employment insurance. So how do you solve for that? So kind of character referencing be a point to solve insurance issuing employment risk products, that these people can be more resilient by finding work. There's very little or no product in the market that looks at health except corporate health. There's no product that looks at life except at the top of the bracket. So I think when you look at ESG or when you look at resilience and risk, it is really about appropriate products and the lack of innovation in appropriate products, the lack of technology in the marketplace, the lack of regulation to allow innovation to happen and innovation to go into the market, because at the moment, companies are dependent on insurance companies of going to market. So you have innovation in the back, and then you have behemoths in front that either do not understand products and innovation or are not interested because they have enough markets that they can serve. And then third, when it comes to agriculture, we need to be very cognizant. It cannot be done commercially. And we have enough studies at the moment that shows that an agricultural risk facility needs to be set up in Ethiopia to address it.
Thank you. And maybe just coming back to you did mention issues around credit scoring. And basically, I was just thinking, is there a possibility if somebody wants to access credit and this particular person has maybe put a lot of effort in supporting maybe green finance or in one way or the other, he's been good in planting trees. Are those factors, are you thinking about such factors that will reduce the lending rates of these farmers based on how they are managing their farms and what they are planting?
So our credit scoring platform works on measuring three things. The first thing is growth. So we look at our MSMEs growing, and we look at growth from either capital growth or number of employees growth. The second thing that we do is we do psychometric analytics. The third thing that we do, which is interesting for agricultural MSMEs, is in what kind of practices they do. So do they do better management of water, drip irrigation? And then it kind of looks at giving them higher scores as opposed to lower scores. Do they use solar as opposed to diesel generators for irrigation? And it kind of plays around with the scoring of that particular farmer's credit score to incentivize either better practices around utilization of water or better utilization of energy from moving away from diesel to solar. So we do that in agriculture. Unfortunately, we don't do it for other type of MSMEs because we do not yet have a product that is available in that segment.
Very interesting, and that's really encouraging to see certain factors, looking at issues around sustainability kind of being introduced within your credit scoring. I'll go to Victor and ideally just to ask what could we play as an industry, both banking and insurance? What role can the sector players take in terms of building a sustainable future? And you can look at issues around what has been mentioned in terms of if there is solar systems, then there's better scoring amongst the people that are borrowing, issues around increasing resilience on extreme events. So what do we, banking, insurers, what can they play in terms of ensuring that we have a sustainable future in Ethiopia or Africa?
Thank you. I think there are three key roles that we should consider. I think the first one is around consolidation or amalgamation of data. I think my own experience is usually there are people who are in separate rooms trying to solve the same problem. And if you come together, especially through industry associations, as I mentioned, has happened in other countries, you can start to create shortcuts to solving some of these problems. Also, you find that you are now consolidating your resources, and you're also able to attract other participants like development partners to come in and support the process. So to me, that would be the first issue. The second one would be around not trying to reinvent the wheel. I mean, if you look at sustainable finance, there's so much that has been done. I mentioned, if we talk about banking, I mentioned Nigeria, there are the equatorial principles by the IFC, there is the Kyoto protocols there. I mean, if you look in every, ADB has put out some, guidelines. So it's possible to go out and find a lot of the information that is required to create these unified structures that I'm talking about to be able to progress a solution. I really liked the question you asked about whether they consider issues to do with the environment. And there are some very useful case studies that have been done in other countries where, for example, for fair trade, I think we know fair trade is where you agree to abide by certain, regulations. And we've seen people attracting much better prices when they export flowers or coffee into the developed world. So there are advantages actually that can be leveraged when we begin to look at this as even, I would call it a business objective. Also, I've seen institutions that are very much supportive of For example, solar. We've seen in the flower industry, which has got a number of issues, but a number of greenhouses are moving into solar, and financial institutions are really supporting that. And you find that from their own electricity bill, they are able to pay for the equipment, the panels, and then they have renewable free energy into the future. So there's a lot, I think, that can be done, but I think it needs to start by people coming together, as we are doing here today, exchanging ideas and starting to put concepts together, and then working jointly to address, and then engaging the various institutions, government, regulators, etc., into the process. That would be my input. Thank you.
Very interesting, Victor. And basically, just looking at the participants, what you're saying is that maybe as of today, we can think about an ESG task force just to
absolutely
something like that. All right, great. So maybe I'll go to Solomon. You did mention so many challenges, but maybe there's a role that we need to play. And Victor's mentioned a couple of issues that needs to be done and the role that the financial sector should play. Do you believe there are certain incentives that would attract players to get into ensuring a sustainable future? What incentives would you kind of require the government, the policymakers to put in place for us to get into this space?
Yeah, thank you. So the first thing, let me first of all see from the ESG components, the very important aspect that works for insurance companies is the social aspect. I will take two issues here. The first is inclusive insurance for the low-income population. That's the first thing. Second, we are also working on the gender. So there are gender-focused programs. For example, my company is running a project called Gender Transformation in the Climate Smart Agriculture for Women only. This is funded by UN Women Projects. That's very important. The other is all those pilot programs that we run for the last 15 years is for the pastoralists and the agro-pastoralists and the smallholder farmers. These are basically people who cannot access the formal insurance. So basically we reach this with the support of donors, with the support of also the government. So in the first place, in order to bring the attractive or issues that include the private sector, the first is from the regulation. Let's have very good distribution systems, technologies, trained manpower, or capacitated national expertise to develop, to design, and to distribute the products. So whenever we brought such entities together, we need, as said, partnership. The first is to create a partnership. From where we start from the insurance association with the participation of the government, industry players, donors. When we bring this thing, it will shape first the regulation, and the market players also will ask what they need. And also the community at large will be educated using financial education. So for me, the incentive is basically what? To understand, in the first of all, work together, create a consultative forum whereby key industry problems are addressed.
Thanks. And maybe just to go to Munir, you work on the innovation side, and you are trying to enable some of these solutions to reach out to those people that been lacking access to some of these solutions. Are there particular incentives that could be brought in place to ensure that you support the financial sector towards achieving the sustainable future? What are these incentives that you might want to bring up to us?
Thank you again. I think more than incentive, what we need at the beginning is a regulatory environment that enables innovation to happen, and innovation without limitation. At the moment, there's a lot of limitation, which means, for example, if you look at the financial landscape, there are 2 or 3 entities that are allowed to take the product to market: banks, insurance companies, and MFIs. The last 6 months has been very interesting for us because for the first time, non-banks are now being recognized by the central bank as either payment operators or payment instrument issuers, which is the mobile money game. So that, I think, will be a game changer because it's now allowing a non-bank financial institution to stand learn products into the market. I think that will be the biggest incentive if I take a singular thing out, that will enable the market to change, behaviors to change, and the market to be unlocked. The second area is we differentiate what we look at in terms of where do resources lie. If you look at credit, at the end of the day, it is really where does resource, whether we have the credit scoring technology or the digital technology that enables distribution channels. At the end of the day, this loanable amount of funding needs to come from financial institutions. So partnership is the second level of work that is required. And there, it is about knowledge, infusing knowledge in the financial institutions of how partnership works. So if you go to Kenya now, or any other parts of Africa, I mean, key for unlocking credit will be a partnership between a telco, a fintech, and a bank. And all three understands the roles and the values that brought into the table. In Ethiopia, that's not understood. Banks, insurance companies, and MFIs, because they sit on the resources, they have this immediate tendency to think everything should be theirs, which is contrary to every part of Africa, every part of Asia, or anywhere in the world. So that's the second, I think, before we go into the incentives, we need to solve the 2 first lines. And when you come to incentives, I think ag and non-ag are very different to us, or credit. Ag requires public-private partnerships and facilities to be set up, whether it is to support the premium to the smallholder farmer to a certain extent, or enabling insurance companies increase their appetite for risk. When it comes to non-ag, it's purely there is the market, and it can be done commercially. It is mainly regulatory frameworks that lack to allow non-insurance companies to come into the market. So that's credit. Again, I think the National Bank has solved it. They have allowed now non-bank financial institutions to issue instruments and go into the payment space. It's a matter of now resources. So the sector lacks resources. So if you look at, again, if you go to Nairobi, any non-bank financial institution will be able to raise capital within a period of 2-3 months. In Ethiopia, that will be 3-4 years. And even then, if you can get access to whether you want to call it from seed, a pre-seed, and venture, there's nothing of that sort here. So innovation is limited to those. So those are the 3 levels of incentives before I think we go to directly incentivizing the sector. I think the market itself is plenty enough.
Great. So maybe just coming to Munir, because you've mentioned the need to allow test and learn, a bit of regulation support, a bit of attract funding, and basically enabling investors to see value forecast to the innovations that are coming up. But are there opportunities for these strategies around the future inclusive sector, whereby women will be highly banked, we will be able to get people that have no access to risk transfer mechanisms getting that particular access? Does this market have the opportunity to get to that level? And can you mention some of the opportunities that do exist that you've maybe encountered in your experience within this financial sector industry?
Thank you again. When it comes to the gender issue, of course, as a woman, we don't have simply, seats and be a beggar for our, rights, and what government should have to. We have to be part of, as there is a problem, we have to be part of the solution as well, to show the path how women, be part of the economy. Because in, for example, if we go to rural areas, there is a disguised employment where the contribution of women, okay, is disguised as if they have no any participation, or as if they don't have any contribution to the economy, which the male is mostly known for that. But in that case, the women are the one who really pays, or who really plays the decisive role. But in order to come at the forefront, organization is very, very important. So they have to be organized, and they have to ask, not beg, they have to ask for their rights, so that to get, access to the loan, access for, to participate in some schemes which they need to intervene, and also those, in the cities, those who think we are a little bit, enlightened or educated. So we have to come hand in hand with the rural women, those women who live in the rural areas, and for those who have no access, who have no access to education, or who have no access to finance. We have to come together to curb this situation. Unless we do that, no one is going to go to stretch their hands and to bring the woman to the forefront. We, as a woman, as a society, should take care of ourselves. That's what I think.
Great. So a big opportunity there, just to ensure that there is a bit of inclusion also on the gender side. So I want to turn back to the audience. I would want to maybe get a couple of questions to the panel before we conclude. So if there's a mic, and if you have a question, you can just raise your hand. I'm happy to take 2 questions from the audience. Or maybe if you have a reaction, it will be important. Okay, fine. There's Mr. Bele. There's a question there. You can also raise your hand. Yeah, you can go ahead, Mr. Bele.
Okay, thank you. The topic that we have been dealing in the morning session was very important and timely. And it's also a good opportunity for us to know what we are supposed to do as far as ESG is concerned. As you rightly mentioned, it's not about corporate social responsibility, but it is about taking the opportunities from the environmental issues, governance issues, and social issues. There are both the challenges and the opportunities. So we have to strike a balance between the opportunities and the challenges. And we have to consider this in every one of our business decisions, in our strategies, and that is acceptable. But on the other hand, most climatic issues, environmental issues, particularly the environmental issue, for countries like us, fortunately, we have the 12 months solar energy. We have the hydropower, the wind, we can also harness the wind farms, and lots of natural resources. And we are not causing so much harm to the environment as others are doing. So taking this issue, ESG or environmental issue, out of proportion and imposing on the countries which are now trying to exploit our natural resources seems for me paying for the loss that was caused by others. So is there anything that will compensate us by taking environmental friendly technologies or production or whatever for the losses that, or for the opportunities that we miss from using our natural resources? That is my concern. Thank you.
Great, very interesting. And that basically brings a couple of risks, physical risks, liability risks, and transition risks. And as Atobele has mentioned, are we going to be compensated? And this is, anyone can take this question. What can we do as a continent to manage, given that this exposure is also being impacted from other fronts, not only within this continent? How can we advocate for that exposure? Because also we cannot just say, okay, we are not contributing much on it. We just go ahead and do and deal the way we've been dealing. How do we advocate for compensation within the context that has been brought out by Atobele? Anybody? So I think it's right that there's a bit of, I would say, exposure that has been caused by other continents, particularly the continents that have been highly industrialized in terms of their emissions. They kind of contribute very high emissions, and that basically impacts everybody. And there's need to see how then we manage some of these particular risks. I know there's global climate fund, and there's a lot of investments that have been coming through the continent. We also need to advocate for each and every country to subscribe. So I think it's important for all of us to start taking the charge and taking the lead in this particular context, and even kind of look at what the global communities is putting on the table in terms of the global climate fund, and see how then as a country, Ethiopia and many other countries within the continent can start benefiting out of that particular fund to address some of the issues that we are currently facing. I see there's a reaction from Kelvin, but also there's another question. So I'll first get your reaction, then I can get that question. Kindly, can you pass the mic here? Then we can take another question.
Okay, thank you very much.
Maybe you can just proceed here. Thanks.
Okay, I'm really grateful for today's presentations, and I have one question for Victor. I'm really interested to hear about the experience and exposures of various countries, where you explained your country, Kenya, where the roundtable discussion brought a lot of learning, and it was interesting when you shared that exposure. So I'm interested to know more about this roundtable discussion, and if it is possible, if we get documents or any compiled materials to see those things in detail, because from the audit background, and I know this kind of deliberations, like roundtable discussions, like a COSO framework in internal audit, has brought a lot of framework where the risk management and all those things which we discussed in different areas consolidated in a framework. Like we have discussing a lot of things here, like resilience, risk management, innovation, opportunity, and ESG. So this material or this exposure would be very good for us to take it further. So thank you very much.
Thank you. Yes, again, just to reiterate, I agree this was really a great initiative brought about by the Bankers Association in Kenya, who convened these 12 CEOs having a roundtable discussion where the challenges of sustainable finance were surfaced, and a project was then created. There is a website, www.kba.co.ke. There's a very nice document in there that describes the whole process, plus some very interesting case studies. Some of the ones I mentioned around solar. I don't know if you've heard of M-Copper, which is a facility where low-income people can get a solar panel, and it powers their house, their radio, they can charge their mobile phone, and it goes for a very low amount, and then you pay every month. And the amount you pay is equivalent to the paraffin that you buy. So they tried to make sure that you don't pay more. You just pay the same amount that you'd use for paraffin to pay for solar energy. And it powers not just lights, but also your TV, if you have one, your radio, and you can charge your mobile phone. And the beauty of that technology is if you don't pay, they switch off the lights remotely. Nobody comes to visit you. Your lights just go off. And then if you pay using your mobile phone, the lights come back on. So it's very low cost distribution and maintenance and collection. Nobody comes to collect money from you. So these are some of the areas that banks have been funding that have had a very positive effect on climate and are within that. But I'm happy also to download and send you a lot of these documents. But www.kba.co.ke, you'll see under sustainable finance, there's a whole section that covers this roundtable, the working group, every step that was taken until this project was finally completed and all 46 banks were onboarded. Yeah, including the training material that is there for bankers. I don't know whether it's available out of the country, but I know it's available to all the bankers in Kenya. Thank you.
Great. Also, just to mention, we've initiated a couple of initiatives. For instance, ESG task force that we work with different regulators in Kenya and professional bodies, and that is just a working group to kind of bring the financial sector together in Kenya towards adoption and integration of ESG in Kenya. So again, those are some of areas that you can plug in as an industry and see how then you could start making steps towards integrating and adopting some of these particular strategies. I just want to maybe, as we end, some ways in which you will end. So maybe what future do you see Ethiopia having in terms of taking what we've discussed forward? Is there a future? Are we going to see some changes in the next couple of months or years based on this discussion? And how do we start to make those inroads in a minute each?
Oh, in 1 minute.
Yeah.
So I just want to make one quick comment on innovation and regulation.
All right.
Because I find that conversation very interesting. And it's almost like the chicken and egg. What comes first? Is it innovation or is it regulation? And many times I think what we say is we need the regulation in order to innovate. My own view is the opposite. You need to first have the innovation and then drive regulators to provide the regulation. And I think the example I gave of the Bankers Association in Kenya is a good one, where they took on sustainable finance and they said, we are going to solve this problem ourselves with help from development partners. And they drove it to implementation and then said to the regulator, please join us. But it's just a thought, it's my own personal view that I think sometimes you have to drive regulators. And this is what I've seen in other markets. If you wait, then you will wait for a long time. That's my thought. And there's a huge, I think, opportunity here to bring about innovation and to drive regulation. Thank you.
Yeah, so that's very interesting, and so I kind of take your sentiments. Solomon, your concluding remarks.
So on the conclusion, what I can say is for Ethiopia is a country with huge population and also on takeoff stage. Ethiopia is under economic transformation. So in order to bring a very sustainable social, environmental, business, whatever, we need to have also a regulation that will speed up innovation and support the economic transformation process that the country has started. So if all the regulatory issues, the financial education, the literacy part, the capacity building issues that we mentioned, the technology, if things are assembled together, I think Ethiopia has a very good opportunity to transform its economy and to change the lives of its population. Thank you.
Thank you. Munir, some concluding remarks?
I think in 2 years, it will be interesting to see multiple products in resilience and risk management tools for 10 million Ethiopians.
Great. In 2 years' time, I think we might come back sooner. So don't chase us away for 2 years. Haile Mariam.
Okay. I think this is the time. I mean, this is the time because now climate change is the existing phenomenon and where all the world leaders are talking about, I mean, whenever they meet. And we are also prone as an African and as an African countries and underdeveloped nation as well. So we don't have any other choice rather than depend on agriculture. Always I want to emphasize that we are highly dependent on agriculture. And that's why even the government have give high priority in, in cultivating, so many urban lands, Arab lands, because of the situation going on in Ukraine, because of the war. So Ethiopia is now going to have its own harvest, which we really appreciate with. And this is the high time, to extend our hands to change our country. And I do believe there will be a change sooner.
Right. Only one reaction from Bele before we conclude. Kindly, somebody pass the mic to Bele. Mic here.
Okay, thank you. Sorry to stand between you and the lunch.
Lunch, yeah.
But I will not take too much time. The issues are very important, particularly the environment is very clear. Every endeavor we take will be affected by the environment, so we have to develop a mechanism that will allow us to withstand the challenge. We have the social responsibilities that starts from handling or treating our employees from our own premises. And we'll go out to our customers where we are supposed to treat them fairly and also treat their information for rightful purposes. And the issue of governance is very clear. I don't remember the person who said that, but the last 1.5 decades, anything that competes with terrorism is, according to that person, is bad governance. So we cannot undermine the potential risk of governance. So we have to, as a state, as a regulator, and as citizens, we have to work hard to minimize the effect of bad governance. The other issue which I want to emphasize is, yes, we have large number of population who lives below, with a low income. We have to be innovative, we have to be far-sighted, and we have to be inspired, particularly the micro-insurance case, which Solomon has frequently raised. Over the last 15 years, the number of households insured is very limited. So we have to think how we can change this, otherwise we cannot keep on doing the same thing and expecting to get a different result. Because for me, microinsurance is a business that requires personal commitment, internal inspiration of CEOs. Yes, it requires public and private partnership because of the resource it requires. Otherwise, even if we provide or the partnership is put in place without the internal motive, drive of businessmen, it's difficult to take microinsurance business to higher level, because you can take, one person can take a horse to the river, but 100 people cannot make it to drink the water. This is what I have observed through time, because we have tried to arrange a number of seminars, workshops. Even we went as far as developing microinsurance, because developing microinsurance cannot be handled by the insurance industry itself. But that process has not brought the desired result. So it requires a different mind setup, special kind of people. I hope that will be available. We'll find through time this kind of personally self-motivated CEOs to take over microinsurance into a better level. Thank you.
Thank you. Quite great sentiments from the head of the insurance component here in Ethiopia. And I like that component where you mentioned it's important for us to take our livestock to the river, but it's the obligation of the livestock to take the water. So I'm really privileged to have a great panel discussion today. And I believe that if this panel was, I would have exposed this panel to my dad, because I've been fighting with him around, he wants to keep 20 cows instead of keeping one that is efficient. And basically I came across McKinsey statistics that mentions that cows are the highest emitters of carbon. And I was like telling him, look, instead of having 20 of them, why can't I get you one efficient cow? But I believe that if he listened to this conversation, he might have changed his mindset. So thank you very much, Gatanesh Haile Mariam. Thank you very much, Munir Duri, Solomon Zage. It's great to again meet you in Ethiopia. And Victor Malu, I know you'll be taking the strategy forward towards creating the rightful ecosystem for integration of ESG and making this particular market sustainable going forward. Thank you very much. And also thank you very much for listening to us this particular afternoon. Thank you.